Okay, so in today's video we're going to have a think about how we go about choosing a broker. There are, after all, countless numbers of brokers out there. You see their adverts all over the place, but the question is, how do you go about choosing one? Most of us don't need loads of brokers. In fact, many of us will just pick one, but which one should you go for? Okay, well, it depends really. There are several things you need to think about when you're looking for a particular broker. So let's go through what some of those are. One of them is the type of service that you want. So if we look at the range of services, and all we're doing here is saying that essentially there are different ways that a broker can help you. Now, the terminology I'm about to use isn't universally agreed, but it gives you a rough roadmap. The cheap and cheerful service is called execution only. These days that's typically an internet-based account, and the idea is you don't actually speak to your broker. You can set up the account online, you give a few credit card details, and then all the ordering can be done from your desktop with a username and password. So you just click the shares you want, select how many you want to buy, and so on. That one is normally, as I say, the internet-based cheapest version of the services that a broker might offer. So if low cost is a priority, then you'll be hunting around simply for the cheapest execution-only internet-based service. However, you might want what are called advisory services, or even a full-blown discretionary or wealth management service. Now, these tend to be more expensive, and here the relationship with your broker is quite important. It needs to be someone ideally you get on with, because you're going to be talking to them much more. So an advisory service, the broker is actually getting involved in your investment decisions. Here they're not. Here you decide you want Tesco shares, and all the broker does is set up the internet portal that enables you to buy them. Here the broker is actually suggesting you buy Tesco shares, and perhaps even when. And here you are giving them complete control of your portfolio. So here they'll be taking investment decisions on your behalf, and perhaps only updating you periodically as shares are traded, and with a sort of portfolio valuation statement tailored to you. So for high net worth individuals, these two services come at a higher price and involve much more interaction with the broker, whether that's over the phone, at their offices, at a nice lunch, or on the golf course. And that's one thing to bear in mind. What type of service do I want? For most investors dealing periodically in relatively uncomplicated securities, execution only is often the answer. But that still leaves lots of brokers out there, because plenty of brokers do this, and then some also do that and that. So having decided which level of service you want, how do you pick and choose? Well, I'd say there's one word that answers that question: cost. So what are the costs of buying and selling a typical security? So if you're into buying shares, for example, what sort of costs would you be looking at, and which ones would you look to do a deal on, let's say? Which ones would differentiate a broker from another one? Well, first cost, I'm afraid, there's very little you can do about it: stamp duty. So when you buy shares through any broker, you're going to be normally paying stamp duty at 0.5% of the purchase price, and there's not very much you can do about that. UK shares attract stamp duty, that's tough. However, you'll also be paying commission. When you buy shares, there'll be a bid to offer spread. And here we're getting into something which you would want to negotiate on. So, in other words, you'd want to look around and see what's on offer. Commission is the idea that a broker might charge you an amount per trade, both to buy and to sell, $9.99 for example. Always worth asking whether that's reduced if you trade more often. So if you do 6 or 10 trades a month, for example, does the fixed commission drop at all? The bid to offer spread is the gap between the buying and selling price on a specific share. Now, you can pick that up by looking normally at the website, but always worth checking on less liquid securities in particular what the bid to offer spread is, because it will vary from broker to broker sometimes. On more liquid, sort of blue chip UK shares, for example, it shouldn't vary too much between brokers. But those two things you definitely want to sort of take a look at. Now, behind the scenes, there are one or two other costs to think about as well. For example, do you want personal membership of Crest? That enables you to basically hold shares segregated in your name rather than in the name of the brokers, and it also means that you get company reports, you get information sent directly to you, and you get the right to vote at meetings and so on. If you do want personal membership of Crest, and people with big accounts that trade regularly often do, then you need to ask your broker about how much that costs. Prices range from about £20 a year plus VAT annually upwards to £100 plus. Then there's the issue of what sort of orders you might be using. So for example, most people when they trade simply say, I want to buy 1,000 Tesco shares at the current market price. A market order, fine, fairly standard. But what if you're into stop loss orders, for example? What if you want to say to the broker, should the price of what I'm buying fall by more than 25%, I want you to get me out of the market. In other words, I want you to sell on my behalf. Now those orders, those stop orders or guaranteed stop orders, come at a price. Normally, the bid to offer spread widens a bit. So if you're going to be using a lot of those types of orders, you want to be asking your broker about those bid to offer spread changes. So have a think about that. If you're a regular trader or you're trading derivatives, for example, spread bets, you want to be asking questions not only about the front end commission, the normal bid to offer spread, but what effect guaranteed stop and stop orders have on the spread, and also what it's going to cost you if you want to do some more exotic trades. And that brings us on to another point, which is the range of services. It may be that all you want is the ability to buy and sell a fairly standard range of blue chip UK equities, so your Tesco's, your BP's and so on, or possibly the odd fund, in which case fine, cheap is cheerful. Go for the broker that's cheapest with a reasonably reliable internet platform, execution only. But what if you're into trading overseas shares? Bit of a pain to set up an account with one broker, only to find 2 months later you've got to set up an account with another broker because the first one doesn't offer the full range of services because they're cheap. So speak to your broker. If you want to trade overseas shares, emerging markets, do they offer that? How easy is it? Does the commission rate change? Those are all questions you want to be asking. And what about outside of shares? Are you going to be trading bonds? Are you into spread betting? Are you even into things like options, futures? In other words, think about what you want to trade and then have a look at the range of services offered by the broker. Now, many brokers will offer a pretty full service when it comes to those various different products and securities, but in particular on bonds, some brokers offer a much more extensive list to retail investors than others. So those are all things to check out up front too. So in essence, we're saying there are lots of brokers out there. Many of them seem to offer a broadly similar service, but you need to have a think about up front to save you grief later, what sorts of things you'll be trading, what the cost structure looks like, and also how often you're going to trade and whether that has an impact on what you pay. And of course, for more information on this, one good source is the MoneyWeek website. There you will find, for areas such as spread betting and foreign exchange trading, tables that summarise for you the key costs and benefits, if you like, of using some of the top brokers in the market.